Now, former Reagan chief economic advisor and current Harvard professor Martin Feldstein is also with us this morning, sitting on my right-hand side here in New York. Professor, welcome to the show.
Good to be with you.
Is this now a full-blown trade war, or is it just one more in the round of negotiations?
Well, we haven't really decided what we want to negotiate about, and we haven't told the Chinese. So, have we?
Far be it from me to contest a Harvard professor, but haven't we told them we want to get that massive trade imbalance down?
But that's not the big issue. The big issue is what's happening to the Chinese stealing of U.S. technology. That's what we should be negotiating
about. Yeah, but that's not on the front burner now. On the front burner is tariffs.
Yeah, but our tariffs are... How is it going to end? Only if they cut our bilateral trade imbalance? That's not a big deal. It doesn't really change much for the U.S. economy. But if we can get them to stop stealing technology, you know how they do it? They say to American companies, you want to do business here in China? We've got 1.4 billion people. It's a good market, but you have to find a Chinese partner. And when you find that partner, you got to give them your technology. Now, we've said that. We have filed a complaint with the WTO. We have said that that's unfair practice against WTO rules, and that's what we should be negotiating about.
I'm sorry, I don't mean to interrupt, but I'm real short on time. You know how it is on this program. It's combat TV. You know how we do it here. If you were the advisor, the senior economic advisor to President Trump right now, the role you played with President Reagan, what would be your advice to President Trump?
I would say, we want to negotiate with the Chinese to get them to stop stealing U.S. technology. And if we have a successful negotiation, we don't make these tariffs take place.
So you change the focus of the negotiations, change it towards the stealing of intellectual property, the stealing of technology, and away from the mere imposition of tariffs.
That's right. The tariffs are only a way of getting them to the table.
Look, the way we're going now, there is damage to both sides. But neither side wants that.
Not a lot of damage. You know, $200 billion is 1% of the Chinese economy, and a 10% tax on that is 1/10 of 1%. Big deal.
So it's not a big deal. You don't think we're going to be affected that much at all?
I don't think so, no.
But neither side can afford to back down and lose face. That's a very important concept in China.
All they have to do is sit down at the table and talk about the real issue, which is not the bilateral trade imbalance, but the stealing of technology.
If you were an investor, would you be a buyer of this dip?
I'm not smart enough to answer that question.
Harvard professor?
I think it depends on how long-term your views are. I think the market is overpriced, quite apart from the trade issues, because I think we've had a decade of super low interest rates, which have pushed stock prices way out of line with past price-earnings ratios. So I would be nervous about buying even if we weren't dueling with the Chinese.
Okay. I think our audience is listening to you, Professor. They are indeed. Professor Martin Feldstein, Harvard, and Mr. Reagan's top economic guy, thank you very much for joining us
Good being with you.
on a very important day. We appreciate it. Thank you, sir.